What happened to that Fed rally? Yesterday was one of those weird days that we don't see very often because finding a catalyst for the sell-off is nearly impossible. Let's go through a few of the news headlines. As Dow sinks over 1,000 points, signs of panic selling emerge in the stock market. The day actually started positive and then it quickly made a U-turn and turned ugly. And our next headline, why the stock market is getting thrashed after rallying on Fed hike. I love this article because it made me laugh when it said, it now appears that after a few hours of deep thought, traders have formed a more lasting near-term view that the Fed is far from dovish, has let inflation get out of control, and is still poised to dramatically slow down the economy through a series of 50 basis point rate increases. So if I am to believe this article, investors in deep thought caused the crash. Right. Or maybe it was US productivity falls at fastest pace since 1947 and unit labor costs soar. This article comes the closest to giving a believable reason, but I'm not buying the labor report theory because Wall Street was already forecasting a 5.2% decline after a weak report on gross domestic product, so this was not the type of shocking news that would blow up the markets. I think the best answer is sometimes stuff happens and we just have to deal with it. And while my account took a one-day beating along with the overall market, today I want to show you how we minimize the damages and maximize profits. I work hard to provide no-fluff videos packed with real data to help you invest better, and all I ask is that you hit the like button to help get this video over 700 likes. Go ahead, take a look, see how many likes it's got, and give it one more to help it along for the algorithm. Thanks a lot, I really appreciate it. All right, now's the time to grab a huge cup of coffee and hang on, because this is not your normal stock channel. Let's start off the day with a 50% profit I locked on VTNR when the markets opened yesterday.
We're now in my Discord and you can see a lot of the different channels on our left-hand side and we cover everything. We've got hot stocks, long-term dividends, you name it, we've got it. But let's go over the trade alerts from yesterday because we can learn a few things from them. So this is our VTNR and I closed 1/3 of my VTNR calls for a 50% gain to lock some profits. I was a little lucky because I put in a limit order before the open and when VTNR popped higher, I was filled and then it quickly retreated. Sometimes limit orders are great on options and sometimes they kill you. In this case, it worked out in my favor. And then we've got when to use a limit order on an option. If there is low volume on the option or a big spread, a limit order can save you from being scalped by the market maker. Now let me show you what that looks like inside of Thinkorswim. We're now in Thinkorswim looking at Vertex Energy, ticker VTNR, and we bought this one right back here on last Friday, and you can see we bought it during a squeeze, which are all these different red dots, a great time for us to buy the stock, and then it shot up and we're currently writing a breakout coming into earnings. Now let's jump over into our trade tab where we can look at the option chain, and here you can see I've got a position on the option, and then this is what we mean by the spread. We've got a difference between the bid and the ask, and I've got the $7.50 strike price and the bid is pretty tight at $3 and $3.20. But if you were to come down and look at this put over here, we can see there's a huge range of $3.90 to $5, and that's where if you use a limit order you can make sure that you don't get scalped, and this is where just simply the market maker is taking you for a ride and taking all of your money. So put in that limit order whenever you see a big spread or a very low volume. Up next, we've got the Tesla $765 put. It was up 90% and should expire worthless tomorrow for a 100% profit. Now, this is whenever the markets were still up. Tesla yesterday crashed hard, down about 8%, but it's a $765 put. The chance of it dropping that low is really still very, very low. So this should be a $320 profit. And that's because I had a 93% chance that this was going to be profitable whenever I sold this put on Tuesday. And this is just one example of some of the types of trades we do. And last but not least, we've got an update. Oxy verticals are up 14%. Oxy just started a breakout and they report earnings on 5/10. Take profits whenever you are ready. Holding over earnings increases the risk and reward. And we'll look at this stock on the charts in just a minute.
And now let's have some fun. On Wednesday, the markets took off with the best day that the stock markets had in 2 years, and that was on the heels of Jerome Powell's news that the Fed plans to stick to half-point interest rate increases to curb inflation. And then in yesterday's video, I laid out the case for why the markets could go on a nice run and that I would not be surprised if they pulled back first. Well, yesterday was more like a mini crash and the haters are going to hate. Jackie Chong said, "No rally, laugh out loud," because apparently Jackie thinks that we blindly buy stocks. So let's use this as an opportunity to go over when I like to buy stocks. And Jackie, I hope you're watching this one. Number one, you can buy a high conviction stock anytime you see an opportunity. And for me, high conviction means I have done my due diligence on the stock and I have good reasons to believe it is a great long-term investment. As an example, I like Tesla and it's one of my high conviction stocks. And if it drops down to $800 where it has good support, I'll buy some more. Number two, I like to buy stocks that are fundamentally strong. Think like Warren Buffett, and anytime you have done your research and believe a stock represents a good value, you can buy it. But I go one step further and like to use technical analysis for when to buy, and we'll go over that in just a minute. Number three, you can also buy stocks on technical analysis. Technical analysis is a means of examining and predicting price movements in the financial markets by using historical price charts and market statistics. It is based on the idea that if a trader can identify previous market patterns, they can form a better prediction of future price trajectories. My favorite way to buy stocks is to combine fundamental and technical analysis to stack the deck in our favor. So even though I might be bullish on the stock market or a particular stock, I never buy blindly. Let's jump into the charts and I'll show you some of the good setups for when to buy and a few of the setups that I like to avoid.
And now let's go over our good setups and our bad setups. We're now looking at Occidental Petroleum, ticker OXY, and our good setup is going to be green on green, just like we have here, and we love to get in whenever it's close to the zero line, which is this line right in the middle on the momentum dream indicator, and the same thing, we've got a zero line on the buy sell indicator. So whenever we get in early on green, that's generally a good time to get in on the stock. And then we can see we had a couple of opportunities here, a brief one here where it was green on green, and then we had red on red, and red on red is our bad setup. Remember, red on red and you're dead and you should be okay. And the one exception to that is if we've got a squeeze and momentum is going up, then we will consider buying. So here we had another green on green opportunity, went straight up. Red on red, we're dead, not a great time to get in. However, we've got the squeeze again, so we will consider it, and we did. And now we can see that our momentum is going up. If we look at the indicator, we can see we've been in a squeeze for 26 dots, so that's 26 days. Momentum is up and our moving averages are stacked the direction that we want. So all things are going right now. These guys have just started a breakout and I wouldn't be surprised to see them go higher. And this is one of the stocks that we have a position on. So green on green we like, red on red, and you're dead. You might be wondering, does this work on the indexes? So let's take a look at the Dow Jones Industrial Average. And here we can see red on red, a bad time to get into it. We had two brief entries here. We would have been okay on those. Our next entry was over here. So in the last 6 months, we've only had 3 entry signals to buy based on the green on green, but we had multiple red on red that would have kept us out of this index. Now we're looking at Tesla, and this is a high conviction stock for me. I'm definitely a Tesla bull on this, but if we're looking at the charts here, we can see a lot of red on red, and we actually had, according to technical analysis, the way these indicators are set up, only 2 opportunities to buy the stock, and we were just in a very long red on red spell. So the indicators will definitely keep you out of trouble. Of course, a high conviction stock is one that you really believe in, and you can buy it anytime you think there is an opportunity, and I will think there is an opportunity if it comes back down here close to $800, then I would consider buying. Let's see, $800 is right here. And you can also see I've got a limit order for 15 more shares if it does get down to $700, and that's just a standing order I have. If it ever gets that low, I'm just going to be buying shares. NVIDIA is another stock that I really like, ticker NVDA. And here we can see, looking at the percent change over the last 6 months, they're down 29%. Well, if we use the indicators, you can see we've got a lot of red on red, and we only had 1 decent opportunity to buy the stock. We would have been okay on that. And you can see this principle really keeps us out of trouble. Now, let's say you like Microsoft, and there's a lot to like about Microsoft. They've got a net income margin of 36.5%, but over the last 6 months, they're down 17%, and maybe you're deal shopping for them. You look at the charts and you can say, hey man, I had one real brief opportunity here, might have lost a little bit of money or broken even. Had one opportunity here, would have made some money, but if we're deal shopping, it's a no-go right now. Coca-Cola, ticker KO, is a stock that I like for inflation. I bought some more Coca-Cola back here in this time frame. Same thing, our green on green, we had 1, 2, 3 opportunities. All of them we would have done very well. We're currently red on red, but check this out. We just got our first red dot. So this is the beginning of a momentum squeeze. And for momentum squeezes, I like them to be 5 dots, which is 5 days or longer. And if we come over, we can see we're on our first one. Our momentum is currently down. So I wouldn't want to buy this until the momentum turns around, but it's definitely something that I want to watch. And our moving averages, they're all stacked the way we want. So this is one that we can watch, but it's telling me, hey man, don't buy right now. And the last one we're going to look at today is Ontario Resources, ticker AR. This one, they've treated us really well. Over the last year, they've tripled in value. A year ago, I said they were going to double in value, and we've made a lot of money on this stock with both stocks and options. Same rules apply. Red on red and we're dead. We had multiple green on green opportunities, and you can see the stock has gone up very nicely. And if we look where we are right now, we can see we were recently red on red, we were dead, went sideways for a little bit, and then we just hit our first green on green, and we got a buy signal yesterday on our lower indicator. And remember, this would be a stronger buy signal if it was coming to us from the zero line. So this is something we can consider, but I would much prefer getting a buy signal down here closer to that zero line. And if you'd like to grab my indicator, I've got a link for those down in the description below.
To sum things up, if you focus on buying good companies when things go green on green, and remember red on red and you're dead, then that can go a long ways towards protecting your assets and building wealth. All right, investors, that's all for today. And if you enjoyed today's video, please give it a big thumbs up. And if you'd like to access all of our trade alerts, including stocks, options, and crypto, or to join our discussion channels where we answer questions and cover investing in more detail, then come join our community. It's really an amazing value, and you see the winning results we're getting every day for investors just like you. And be sure to subscribe to the channel and check out jerryromine.com for all of my stock videos and stock indicators. Peace, and I'll see you on the next video.